This is Christopher Lewis from the dailyforex.com trading desk, and I will be looking at the Euro US dollar for the February 13th Forex session in this video. And as you can see, I have the chart pulled up. Looking at this pair recently, we have seen a nice decline with a bounce predicated mainly upon a market trying to get in front of some kind of debt deal coming out of Greece. Well, on Friday, the signs of a debt deal being done started to crumble as various problems occurred with it. With the Greek parliament, several cabinet members have resigned. The Germans have also said that what they're talking about does not satisfy the needs, so therefore we are in limbo. As you can see, a shooting star had formed on Thursday, and of course the breaking of the bottom of a shooting star is a very bearish signal as we pull lower. You'll notice that the long term, or longer term I should say, from late October to January fall that we saw have drawn a Fibonacci retracement on it, and it lands right at the 3250 area, which I also have as a support and resistance zone. So the fact that this happened here was probably not so coincidental. It just looks for some type of news headline to move it, and there you go. Typically you'll see this. It comes down to which way the market's leaning when bad news comes or good news in other circumstances. Looking at this, it appears that we are going to make a plunge down to the 130-ish level. It's kind of a thick zone down here, so I wouldn't expect it to slice right through unless, of course, we have some complete blow up in Europe over the weekend, which is always possible, given the way things have gone. 130 becomes very important to me at this point in time, because if we can close below 130, then by all rights, we should be back down towards the bottom, testing the 126-ish level, maybe 126.50 or so, and as a result, could get very interesting very quick. With all this being said, you always have to question whether or not there is an upside to this, and quite frankly, I don't see one until we clear this cluster, which is all the way up at 135. And the reason I say that is you have the 50% retrace right here at about 134, so I would suspect, without getting there yet, that we will probably have about 100 pips worth of serious resistance in this area. So it does look very bearish, and on top of this, once they get the debt deal worked out, there are now grumblings of Portugal wanting some type of, shall we say, debt restructuring. So we may get to go through this again with a completely different government involved. And then you have to ask yourselves, at what point does it become okay for the Greeks to take a debt reduction, the Portuguese to take a debt reduction, but not the Spanish, Italians, or the Irish? You can see how this would snowball very quickly. On top of all of this, Italian banks were downgraded by the S&P on Friday. Off the top of my head, I believe it was something like 34 out of 37 that S&P cover. So the Italian banking system doesn't look quite as healthy either. With all of these things being thrown together, I am short the euro and will continue to be. 130 is my next real serious question. If we break that, we should see about 126.50. Again, I won't go long until we get post 135. That would show a serious sentiment change. But until then, I have to be short the euro dollar.